Hello everyone, and thank you very much for joining us for today's webinar, which is called The Future of Liquidity Management in a Changing Business Environment. My name's Chris from Nordea Insights, and I'm pleased to be joining the webinar today as the moderator to guide us through the next action-packed 45 minutes. Before we get started, just a reminder to let you know that this webinar is being recorded and will be made available on our Nordea Insights platform later on, if you want to share it with friends and colleagues that could not make it today. This is a 45-minute session, and we've set aside the last 15 minutes for a Q&A. So if you have any questions along the way, please pop them in the chat and we'll try to get to them at the end. Now, for today's webinar, we've got a special panel assembled, and I'm delighted to be joined by Rasmus Thompson and Catherine Sandgren from data consultancy Flowtale, and Katie Spicer Eriksson, Birgitta Hoff, and Silvia Tovia from Nordea's liquidity product team, to discuss the future outlook for liquidity management, reflecting on the impact of new technologies and the factors companies should consider to enhance their liquidity processes, both now and in the future. So sounds like it's some exciting themes to be talking about. Liquidity management has been undergoing a rapid transformation thanks to the emergence of new technology, the increasing availability of data and interconnectivity. Banks and fintechs alike are partnering up to develop new solutions to meet the needs of their customers, resulting in a changing landscape of liquidity management tools and systems. So some recently conducted new insights from Nordea suggests companies will continue to move towards real-time, automation, and centralized setups in order to increase efficiency and free up time for developing their business. So some really exciting themes to be discussing today. So maybe you, Rasmus, can say a couple of sentences about yourself.
Yes, thank you so much, Chris. So my name is Rasmus. I'm a partner at Flowtale. I spent about half my career in tech, which is the side I'm representing now, and the other half in corporate banking. And I would say with an outset in that experience, I do believe that treasury functions sit on extremely valuable data, and I hope that we get to discuss that a little bit today. So I'm extremely pleased to be here today. Thank you so very much.
Brilliant, thanks, Rasmus. And Catherine?
Yeah, so Catherine Sandgren. I spent most of my career in banking, actually, almost 30 years, and mostly in international banks. I joined Flowtale about 6 months ago, and I mean, similar to Rasmus, I mean, I see great potential in what you can do with the new technology in terms of solving the challenges for corporate. So I think it's very interlinked.
Thanks, Catherine. And Katie?
Yeah, hi everyone, good morning. My name is Katie Spicer Eriksson. I work over here at Nordea. I'm the head of the product management team that look after our liquidity management and corporate channel solutions. I've been with Nordea for about 2.5 years, and before that I was working in 2 other global transaction banks, always in product management for transaction banking solutions.
Thanks, Katie. And Birgitta?
Good morning, everyone. I'm delighted to be here with you today. I'm Birgitta Hoff. I'm situated in Copenhagen. In my career, I have worked with cash management on several bases. I have been the responsible for Nordea Life and Pensions team of incoming payments, so where we were receiving and had a need for being efficient in transforming 150,000 incoming payments per month going into the accounts. For the last 4 years, I have been responsible for Nordea's cash pool solutions, and I'm happy to share with you today how we can make also cash pools relevant in the future. So I'm the cash pool nurse sharing things with you today. I'm looking forward.
Great, always good to have a nerd along. Sirpa?
Yes, good morning, everyone. My name is Sirpa Toivio, and I'm also working in the liquidity management team together with Birgitte and Katie. And I've been in Nordea for 15 years now, and before that I've been working in a couple of treasuries. So altogether I have over 20 years experience in liquidity management. Today my responsibilities are sweeping services and virtual accounts. I'm also happy to be here with you today.
Thanks, Sirpa. So let's get straight into it. I mean, obviously liquidity management is the key subject that's in the spotlight. What context are we talking about when we mean liquidity? Over to you, Katie.
Yeah, thanks, Chris. Yeah, good morning, everyone, and thanks again for joining us today. So liquidity management in the context of today's discussion is really about a few key themes. Firstly, liquidity overview, so the view of your cash and your balance sheet, the interest and the fees that are being applied to your liquidity, the allocation of your credit lines, and of course then being able to see your liquidity through various lenses, and that could be by subsidiary, company, currency, you name it, how you want to see your overview. Then, of course, we have controlling risk, and that, of course, talks about clear processes for cash handling, your FX risk appetite, and your financial and treasury policies in that regard. Then next up, we have efficient processing. So what daily tasks need to be performed, how automated are those today, or how automated would you like them to be, and where is the human touch still actually needed in those processes? And then finally, cash for your business. And this is really the crux of any liquidity discussion, because this really is about having the right cash in the right place at the right time. And that, of course, means how do you do very efficient and effective cash flow forecasting. So that's what we'll be talking about today, Chris.
Thanks, Katie. I mentioned in the intro that Nordea has recently conducted a survey into liquidity. Can you tell us a bit about that, Silvia?
Yes. When we plan our services for the future, we always look at forward ahead, and this time we actually wanted to share our views with you guys also. So that's why we went out with the article that Chris mentioned. How we did it was actually that we interviewed our customers and our stakeholders from different areas, and we had a lot of good discussions about the future of the liquidity management. And after that, we also checked what can you find publications and other articles in the world about the liquidity management future, and it was really interesting to find that the topics that we have found were also mainly there that we discovered. And today, as mentioned by Katie and Chris, that we will discuss the main topics from our survey today.
And one of those topics was obviously controlling cash. Birgitte, how do you think companies can improve by having better control of their cash, and particularly where do you think this is going in the future?
Well, as we say, we all like to touch and to feel things in order to really see and understand what it is. So controlling cash is about having it touchable, seeing it, so you can spend it, so you can use it. So controlling cash is something that we know that all corporates throughout the world have a need for. However, there's many ways of operating your cash. You can be a big corporate having local entities in many countries and having a really strong operation where you have the financial processes being done in each and every country. That's not a very centralized way of working, and it might be the right thing for you. But for other customers and for other corporates, it could be that centralizing your financial processes is perhaps more interesting. And we've seen over the years that there are many corporates who have spent time on centralizing processes in order to make sure that you have this control. And there are barriers to the centralization. However, if we look at what we offer, what we as a bank offer you as a customer, we also know that tools for centralizing have been using cash pools. It's been doing automation of FX, could be the Nordea Auto FX that is used. We also have all kinds of sweeping services that you sweep, that you control, that you centralize you concentrate your cash, and all of that are tools that helps you to reduce your risk and bring you in a position where you can control your cash really well. We also see that if we're looking into the future, all of these aspects of controlling your cash and the risk of and the cost of doing that, they will go down. So today, just opening and signing a bank account with another bank a bit far away from where your financial headquarters is, if that might be in the Nordics, that can be cumbersome. Signing digitally is not available throughout the world, but that will change. We know that. That's already started. And I don't say that we Nordea are really good at it today. We are also on a journey benefiting from all the new financial possibilities or all the new digital possibilities that are out there. But the barriers of doing this are going down. So centralization is definitely something that we see will be stronger in the future, and bringing you the option to benefit more from working with aligned processes and driving down your risk. All of this, of course, is something that should support you in your efficiency, not spending too much money or time or worries or manual processing. Sirpa, how do you see this in a cash control aspect.
Yeah, of course, efficiency can be achieved in very many different areas. But today, let's talk about the fully automated processes and centralization of data and how you collect the data and you need to transport the data. And that needs to be faster in the future. So that's something that we found out in our research. And by automating these repeating everyday tasks, it is possible to save costs and time to process the activities like payments and reporting that you do every day, and having a really good overview of your liquidity. So instead of collecting and pulling the data together like we do today, the future task is to change towards the analyzing the data and especially to plan for the future. Cash forecasting is a good example for that, and having an overview of the liquidity to be kind of one step ahead. And we all know that COVID-19 has also proved that this is the need we need. These are the steps we need to go forward to. Still in the automation world, like you said, Birgitte, there are still needs to support the self-service, like account opening and closing, being able to change the account structure anytime when needed. And in the future, the accounts will also be used for supporting the business and not only for the accounting and reconciliation. And this is expected to be growing in the future.
Thanks, Sirpa. And Birgitte, that was super interesting to hear. We thought we'd get an idea of what are your main pain points in liquidity management for everybody listening. So we'll just run a quick poll, and you can answer just by ticking one of the boxes. So is your main pain point that you're too dependent on manual processes, limitations in access to cash, the needed info or data is not easily available, you have no budget to improve the liquidity process, or is it something else? So if you mark up one of the boxes, and we can find out what's troubling you out there, everyone who's listening to the webinar today. So take a couple of seconds. Okay. So let's see. So looking at the results here, manual work in reconciliation of payments is something that's out in front. Other, second, have to find out what that one is. Data not easily available, cumbersome processes, and poor visibility of cash. So who wants to comment on the poll there? Sirpa?
Yeah, I think this manual work in the reconciliation, that's actually what I expected also to be quite high. And automation, like we discussed earlier already, is kind of the thing, but don't try to get everything in one go. So think about the biggest pain point and start to work towards that one, and have a plan to where do you want to go and what do you want to achieve, and then start to take it in pieces, and then get rid of the manual work, and instead of starting to analyze the results. That would be kind of my takeout from here.
Thanks, Sirpa. Moving on to another topic that was came super to the fore during your survey, which is, of course, real-time. The emergence of real-time is obviously a huge factor affecting liquidity, but Birgitte, hasn't that been around quite a while anyway?
It's true that real-time have been on the table for a long time, yes, but it's a very, very hot topic, and we hear about it every day when I open my mailbox. There are topics coming in with consultancy firms or software providers all over the world that are touching about the real-time topics. But yes, if we look into Nordea, we have offered a real-time cross-border liquidity management solution. Our global cash pool, it's been up and running for now 10 years, where we have offered a solution where you can have access to your cash in many countries throughout Europe in real time. And I would say that's something that we know that there's a lot of corporates that have benefited from if it's given options of really being efficient in working with your working capital, being able to optimize your balances, and driving down idle cash at a quite advanced level. We know that one thing is that we have had real-time liquidity management solutions for a long period of time, but we also know that there are new things coming to the table. And what all this fuss is about out in the world, well, no doubt all the APIs are bringing new, the technology here is bringing us new options. So instant reporting, of course, is obvious, something where you can see what's on your bank accounts in a real-time information. We know that there are still no standards in this area. It's something that will develop. I tend to say it's the new kid in town, these APIs for instant reporting, but they will be the proven way of doing things that will come steady over the coming years. We know that instant payments, real-time payments, is something that have been on the table. We've had it in the Nordics for several years now. It's not something that we use for corporate payments in a big scale. And it could be that it's also because there are still some barriers to it. Real-time payments don't have the value day loss, but on the other hand, there's coming some cost to it. They are more expensive, but in order to benefit from it, you also need to have the processes around it. And I think we are all afraid that if we don't control this instant world, we fear sitting looking in our electronic banking system and seeing some fraudster being kind of touching our money. So everything is evaporated in kind of real time in front of us. So yes, there is a need for understanding how the real time could be used beneficial. Where do you, Katie, see that real-time could come more clean or could be used in the future?
Yeah, thanks, Birgitte. So I can never remember who said it, but there's a quote, there's no such thing as a new idea. And I think that's certainly true with real-time. It's not a new concept. It's been around for some time. And banks have already had some solutions that have been real-time, as Birgitte mentioned. But I think what's really changing now is just the sheer application of real time to everything, actually, not just in the context of this discussion that we're having here today about liquidity, but just in all our lives, right? So we just want everything now, fast, and that's even down to same day delivery of goods, when you order online. We just want everything faster. And of course that seeps into financial services as well. And I think I actually went yesterday to take some clothes back to a shop and was told the money would be in my account within 3 to 5 days. So I think we've still got some way to go before the adoption of real time is really here in some places. But I think instant refunds because of API technology is already on the horizon, and that's a really good use case. So I think what's important when you guys think about real time is you don't have to go and change everything to real time tomorrow unless you have a really want to do that, of course, in which case great and good luck to that. But I think what's really important is to a bit like Silvia was saying earlier, is think about where you've got processes or ways of working, maybe the manual reconciliation of payments, for example, that came out in the poll. Think about things that are cumbersome, things that maybe have not very robust processes around them, or things that are just inefficient, and see if real time is now the technology and the way of working that can unlock that, whereas before that wasn't available to you. So there's no point, you don't need to be real time for the sake of being real time. It needs to add some benefit to your business, to your processes, hopefully ultimately to your end customers as well. And I think that's where to focus, right? So don't get overwhelmed by, oh my God, everything needs to be changed to real-time processes tomorrow, but just take an iterative approach based on where the real business benefit is for you, would be my comment to that. But of course, being able to do that hinges quite a lot on having information at your fingertips and being able to read and understand and access that information. So being able to kind of go to this new future that we're talking about really depends a lot on the availability and quality of data. So Silvia, would you say some words about leveraging data in this changing business environment that we're in now?
Yeah, the future, of course, it brings a lot of opportunities if you have the access to high quality data, and that is really important to have the access to that one. But then, like we hear often, but it's so hard to get access to this data, and it's scattered all around the world when we have international companies. But still, you can see that the importance of the data is really increasing in the future, and not just least in the finance departments and functions that needs actually to access the data. And there we of course we would need the analytic tools to see and act upon that information. And yeah, Rasmus, can you actually think that how do you get the data? How can you get started actually?
Well, I mean, it's a big question, so I'll try to constrain myself a little bit. So I think you're absolutely right. I mean, the hard part is getting the data accessible and making it structured and available for doing data science and these type of things that we hear so much about. But I think where we need to start is understanding the value of the data that the Treasury has. And I'm of the very firm opinion, and it's not very spoken about truth, that the treasuries, the corporate treasuries, sit on data that is extremely valuable. I mean, the treasuries sit on data, I would say rich, detailed data and information about each transaction done in the company, not just to the outside world, which is partners, clients, vendors, suppliers, but also internal entities transacting with each other. And that data has an extreme value, not just for the treasury itself, optimizing, automating, making the processes more intelligent, but also to the rest of the organization. And I hope that we at some point today can also touch a little bit about that. But I think that is where you need to start. And when you have that understanding, you then need to go into the investment of making the data available. Because when it comes to advanced analytics, AI, whatever you want to call these things today, it is all about making the data available. If you look at a data science company like Flowtale, I mean, we do a lot of intelligent things, but 70% of our entire staff is data engineers that is working on dragging this data out from the systems. I mean, these systems that are trying to hold on to the data for their dear lives, even though it's your data. Some of these systems, we can also talk about it later if you want. So get it out there in an infrastructure, in a storage that can actually be worked with, and then the data science on top. And I think now people here at Flowtale will kill me for saying this, but the data science on top is then the easiest when the data is well structured. So understanding the value of the data that you generate, that you create, and that you own and have in the corporate treasury will get you to a point where the business case of making an investment in the infrastructure is, I mean, to me, it's clear cut. It's a no-brainer. So that is the way that we see you can go to a future-proof and future-ready treasury.
Thanks, Rasmus. Now, of course, all around us in finance, tasks are increasingly automated with robotics, and many companies are getting more and more familiar with the concept. But talking about AI, is it obvious the differences between AI and robotics?
Well, I mean, in our world, it is. I mean, it's being used interchangeably, I mean, for a long time now. But basically, robotics is executing, right? There's no decision-making, no real intelligence. It's executing a process that is fixed and firm. It could be a human being doing it, or it can be a piece of software doing it. And in this case, the robotics processing is the software. The AI or machine learning or whatever you want to call the more intelligent part of data science is making the decision. So before you execute on it, there needs to be made a decision. And if there's a lot of data forming that decision, this is where intelligent modules and algorithms like in the umbrella term AI can make those decisions. And those decisions are then being either displayed on a display in like a dashboard for a human being to take action, but it can also be pushed into a piece of software like robotic processing for then to execute on that process to keep it a fully, straight through process.
Thanks. And obviously AI requires data then. So Catherine, what sort of data are we looking at?
I mean, it of course depends on what you want to solve with AI, what data you need. But if we stay within the topic of liquidity and, for example, look at forecasting, it would be any data that drives your cash position. So taking a typical corporate, I would say you probably would look at the ERP system. You would probably have an HR system where you have payments going out. You might have a separate system for taxes. You would most likely have a TMS system if you have any size or international reach of the company. So I would say every system that contains data that drives the cash position would be relevant in that case. And the same goes whatever you're going to use the AI for. You know, where do you find the data that drives what you want to solve?
Thanks. And so over to our listeners again. We thought we'd run another poll just to find out how AI is coming into your world. So are you planning to use AI in the future? And the options are: I'm using AI today, yes, no, or I'm undecided. So another snap poll. Be interesting to see your thoughts. Oh, actually, we only have a yes or no here. So are you planning to use AI in the future, yes or no? Couple more seconds. Excited to see what the scores are. And it looks like yes is almost 2/3 there. So yes, obviously out on top by a bit. So Birgitte, I don't know if you have any thoughts to this one.
I think artificial intelligence, it's something that we at least, that seems very intangible, and now Rasmus just explained us the difference, but I'm thrilled that so many of you have considered it. I don't think it feels soothing that we could do thinking that I'm not the most optimal to perform my task, that something else could do it. But we all know that we need to consider how to benefit from that. So I think congratulations to all of you who are looking into to how artificial intelligence can be used in improving your processes going forward. And I think in that sense, it's really great that we have Flowtale with us here today. And I know Catherine and Rasmus that you will help us in sharing one of your examples on one of the use cases that you have worked with, and I guess it will be the forecasting that we now will hear of. So could you please share with us what is AI? How can it be used in practice?
Yes, and I think it's fair to say that whatever happens in the finance department and looking at the liquidity is going to be, you know, going to have to rethink what you do and how you can use the data if you actually want to get most of the value out of it. Maybe we can take the next slide. So basically what, you know, to me there are two sides of it. One side is to look at what is it you do already today that could be automated or done better by using artificial intelligence. And that is basically the right-hand side. So if you put an intelligent engine on the forecasting, which basically instead of looking at what you have in the ERP system as incoming and outgoing payments, you would instead look at patterns in the historic payments, you know, to predict the future payments. What you will probably get is what you will get is a better prediction of the future, and we're going to show that as well, how it works in practice. But so what that gives you then is a better ability to understand if you're going to be overdrawn or if you're going to have idle balances on your account, which means that you can take better action to make sure you minimize your working capital cost, but also in terms of the reporting that you do today. So once you have that liquidity position, I am sure you report it at least upwards, but maybe also sideways and back to the subsidiaries across the globe. So how much time do you actually spend on reporting, and how could you then automate it using these insights you get from the data that automatically comes out at your fingertips? So that is basically to do what you already do today, but do it better. And it doesn't really add anything more than efficiency. If you take it to the extreme, what becomes really interesting if you look at some of the things you can do in addition to what you do today when you get the data, and you know, I can probably talk a very long time about this. So I'll go just to one example to illustrate what this can do. So say for example you have one customer who always pays on time the monthly invoice on the 15th. That happens every month, year after year. You know, how long would it then take if this customer starts slipping on the payments and start paying on the 16th or 17th or 19th or whatever day they start paying? How long will it take for the reconciliation department? We just heard it's very manual. You know, how long will it take before they pick up that this customer is no longer paying on time, he's slipping. And to me, the slipping can mean, the only thing I can be sure of is that whatever you come up with, the computer is going to do it quicker. It's going to detect the pattern has changed quicker than any human can do. And not only does the human have to detect that the pattern has changed, it has also to understand, I actually need to report this to someone who can use that information, which takes even longer. So that is the starting point. And if you then think about what could be the reasons why the customers start paying late, well, one of the reasons can of course be that he's just sloppy, or he needs, he's trying to cheat and get some extra payment terms, which is the good cause, if you say, and the only thing you as a corporate miss then is the liquidity, or potentially interest on overdue payments, and that is bad in itself in a way. But the worst part is, what if this company starts slipping on the payments, either because he's lacking liquidity, or maybe he's even, about to default. That is something that is really critical and that you need to know as a company, so that you can take whatever precautions upfront that you need to do. I mean, whether that is getting some protection when you sell to this customer, or getting paid upfront. Or worst case, if you realize that it's actually because of the credit quality, maybe you should stop selling to them, because selling to someone doesn't help if you don't get paid. So what I want to illustrate with this one is, what you can do when you get, and I mean, what Rasmus was into, if you actually get the data in your hands, if you get it in a system, you can do with it the analysis that the system provider allows you to do. If you have it at your fingertips, and if you go through that process of actually making sure that the data is freely available for you at Treasury, first of all, you can do all of that automating and making whatever you do better. But second of all, there are endless opportunities of what you can do if you think about, how can you use this not only for the benefit of Treasury, but for the wider organization. So helping the sales organization, or whatever part of the organization it might be. So I think that is something to think about, and I think it will take some time for people to get it and to understand the full value of this.
Thanks, Catherine. Anything to add there, Rasmus?
No, I mean, we have a concrete example that we brought that we can just spend the 2 minutes on. So if you can take the next slide, please. So it's an exercise that we've done quite a bit the last year or so, quite a lot actually, I would say. So it's something that I know is very dear to you, and is very dear and close to the topic of today. We basically try to do a purely machine learning driven cash flow forecasting on. We spent 1.5 years worth of data approximately for this specific example that you see in front of you. Where we try to kind of not do it the typical way, where, I mean, the cash flow forecasting and liquidity forecasting today is typically, you net out account payables and account receivables, and then you figure out where you will land. We wanted to take a different approach, not do that at all, not involve those accounts at all, but only look at the historical patterns and the historical data that is being given. So we looked at in this case, a large multinational client of Nordea, actually, and one of their most frequently used and most active currencies. And just basically let a machine, and of course there's a lot more to it than just letting a machine talk. So you're free to reach out after this if you want more details. But for the sake of time, we just let a machine run some of the typical machine learning techniques and methodologies to understand, interpret the data, and we asked it to basically give us, on any given day, we want the net cash flow for the next 3 days. And what you see in front of you is pretty much the result, right? So we ran, after the 1.5 years worth of data, we ran a real-time or a real-life example, where you can see the black line is what the model predicted, and the blue line is what the actual outcome was. And of course, there are areas of margin there that you can kind of apply if you want to. But I think the main takeaway is that, without even looking at account payables and account receivables, just focusing on the historical data and the historical patterns, we actually, the computer, not we, but the computer itself actually got pretty close to the real life scenario.
Pretty fascinating. It's great to see, and moving on to as we draw to the close, actually, and don't forget, if you've got any questions, please drop them in the chat. But just to wrap up a little bit, Katie, I mean, you know, liquidity management is hunting for efficiency, and is there anything that we should take away from this session, do you think?
Yeah, so I think it's been a really good discussion, so thanks everyone for the comments. And like Chris said, if you have questions, drop them in the chat and we'll get to them shortly. We've been discussing a sort of few fundamental things today around liquidity, so the controlling of the cash, the move towards real time, and then of course lastly data, and how data, we really believe, holds the key to lots of new possibilities and ways of working, not just within the context of liquidity, but as Catherine said, actually to really improve the business performance across the whole board, and to use that insight and that data to do so. But I think it's safe to say that the main pain points are still persisting, and we saw that in the poll, that manual reconciliation is still quite a challenge, even with all this new technology. So the main pain points and challenges are the same that we've seen for a long time, and that is, of course, trying to hunt for the efficiency and make everything as most effective and efficient as possible, so that the business can run as effective as it can. So I hope that in this webinar we have hopefully sort of encouraged you to take a fresh look, put on a fresh pair of glasses, be a bit inspired after having some time here with us today, to look at your processes, look at where you've got your challenges, and maybe just have a fresh pair of eyes on them and see new opportunities for where you could make some improvements, where you could make some benefits. Don't get too overwhelmed by all the changes and all the cool stuff. It's quite easy, I think, to get a bit swept away by it and think, oh, I don't know how that could possibly apply to me and my business. But we're here to support you to do that, and to help you to unlock those opportunities and that potential within your treasury practices, and indeed wider across your business. So hopefully you'll go back now to your offices, or remote offices I should say, and have a little food for thought after today's discussion. So thanks very much all for listening, and yeah, I think, Chris, we can open for some Q&A before we close.
Great. Just checking the chat here. How can virtual accounts improve liquidity management?
Oh, good question.
Take that one.
This is for me. Yeah. One thing is, of course, when we think about the reconciliation, if we think about the poll we had, also the manual work, if you take from 2 seconds to 2 hours to clear up one incoming payment, it's a lot of manual work. In the virtual accounts, you can actually give a virtual account per each customer, and then you can identify immediately that which customer you sent the invoice. So you are sending the customers the invoices, they get real looking accounts, they are IBAN accounts, and they pay to that one, but it's steered to your main account, and with the virtual account you can identify the invoice receiver. So that is definitely giving more efficiency in the reconciliation. Of course, you can use virtual accounts in many other ways also, like for supporting your sales, or you can have salespeople to look into their customers' payment behaviors. Maybe also have some artificial intelligence in that one, combining that towards the future. So yeah. And of course, in outgoing payments, you can have follow-up budgets or projects to see how it's proceeding, and kind of separate the funds. You can segregate the funds in any way you want to do, because you can decide to open the virtual accounts. You can decide to close them also whenever you want. If you want to have a virtual account for a year or a couple of months, it's up to you to decide.
Great, thanks, Sirpa. We've discussed quite a few things that you can do. So where do you think that people listening should start? Let's take that one. In preparing for the future, really.
I could comment. I think Katie said it. You need to sit down, take a fresh eye, and look at your financial processes. Look at where you know that you have some pain points, but also look at where remember, where is your corporate heading? What is your corporate strategy? Are there any emerging technologies? Isn't the fast-moving consumer goods, is there something in benefiting from the real-time activities that we have out there? So it's all that combination of where is your business heading, and looking into how can your financial processes support that. So yeah, that's our suggestion on where to start. And there is a lot of things that you have in your processing today, in your financial processes, that will also be there in the future. We think that cash pools will be a really strong offering also in 5 years for some customers, but there might be other customers or corporates that need to look into some other ways of controlling your liquidity. So that's one way of seeing it. Virtual accounts is another way of seeing it. But again, look into your pain points. Combine what is your need seen from a corporate strategic angle. What are your pain points and where do you want to go? So where do you need to improve?
Thanks, Birgitte. Perhaps one for Rasmus and Catherine. When is it even relevant to consider AI?
Do you want me to take that one, Catherine?
Yeah, you can.
I mean, it's I would say always and never. I mean, you should always consider it. It's never really relevant in all over the place. I think there is an idea, and we read about it so many places, that AI can solve so many things. We are not that advanced yet. We are not. We need to be realistic about it, and we also need to look at the cases that is being presented to us, because when we see let's say a Spotify or a Klarna, or those type companies, very new, they were invented, when data science was a thing. They are built for that type of stuff. The typical large corporations in the Nordic, I mean, they are from, before the computer even existed, and they have a history of acquisitions, and their data landscape is extremely fractured, and it's extremely complicated to work with. So I think the typical corporate treasury should not start to look at AI first, but started looking at the data and what can we do. And I think the first steps is then you can do intelligent automation, robotics, and things like that. And then the more sophisticated things will then come on top of that. I think there's very few that are ready to do actual AI today. And I think it's just to kind of underpin that fact, AI is not clever enough to take away any jobs. It is not something that will take away any people's jobs today. I think for some senior management, I might say something controversial. I think a lot of the management consultancies want senior management to believe that they can save a lot of money implementing AI. They cannot, but they can definitely help making the jobs people have today a lot smarter and a lot better.
Thanks, Rasmus. That's a really interesting point, actually. Drawing towards the end, a little bit of a crystal ball question. What's different in the future then? Perhaps that's one for the Nordea team.
Wow, that really is the crystal ball question. Actually, we had some statements that we made from our research, and we were interested actually to see how well those would age. So maybe we should repeat this webinar in 3 years and see how well those statements hold up. But I think we had a couple of insights. I think we've sort of touched on them a little bit. Definitely the adoption of APIs as the kind of a main tool. We think in 5 years they'll still be new for some people, but for others they'll be fairly well adopted. So we definitely see APIs becoming a lot more prevalent, and the kind of way of communicating with you communicating with us at the bank, and of course communicating with other systems within your own environment and with your customers. So we definitely see that. And I think Birgitte also talked about it earlier, that in sort of historically, this kind of centralization and those kind of treasury structures have been the sort of the mark of the larger corporates, because they've needed sort of tools and sophisticated ways of doing that. And now with the technology that we have, and the sort of availability of that technology and the accessibility of that technology to kind of corporates of all sizes, then we see that way of working is kind of would be across the board. So no longer just for the large kind of multinational corporates, but just sort of a general way of working with centralization of at least visibility of cash. I don't know, Birgitte or Sirpa, would you like to add any final comments?
We know that that we as a bank will continue providing you strong services for liquidity management also in the future, but we also know that you should look into fintechs. Are there other service providers out there that could complement the offerings that you have today? So you need to look into if you should look to have other services complementing the setup you have today.
And maybe if I can add one thing, if once you have automated and done everything you can, either if it's with the bank or with the robotics process, then in a way you have taken away role of the finance function unless you find a way to use that data you have and be relevant across the organization. And then you will be the heart of the company. You will continue being the heart of the company.
Thanks, Catherine. And I think on that point, we better draw this to a close. I think the clock's got ahead of us. So just like to say a huge thanks to the panel for joining us today. I think it was a super interesting discussion. And as I mentioned at the start, this will be recorded and uploaded to our Insights platform, Nordea Insights. So you can always share the recording with your friends and colleagues. And I suppose it's goodbye from us, goodbye from the panel, and have a great day.
Bye.
Bye, everyone. Have a good day. Thanks ever so much.